Given Bitcoin's recent volatility following a long period of very choppy consolidation, a number of metrics seem to be pointing towards whales taking advantage of these dips to buy even more BTC. However, is this really the case, or is the opposite actually happening? Today, we're going to be looking at whether BTC whales are still accumulating BTC and where better to start than the long-term holder supply chart we have here on BitcoinMagazinePro.com. So if we just zoom in over the most recent few months, since Bitcoin set its highest closing day price at a new all-time high, March the 13th, we've recently seen the amount of BTC held by long-term holders increase from 14.86 million all the way up to 15.35 million. So many people have been seeing this and thinking, wow, that's millions of BTC being scooped up by long-term holders. So now they're really aggressively buying the dip. This is going to fuel the next move higher. But unfortunately, I hate to be the one to burst the bubble. This likely isn't the case. Long-term holders are defined as wallets that have held BTC for 155 days or more. And 155 days ago was March 13th. So we're actually seeing probably a lot of holders who bought BTC during this initial run up to a new all-time high, now just bag holding. They've transitioned from short-term holders to long-term holders and are now probably hoping for even higher prices. But really, this isn't a huge amount of BTC being scooped up by longer-term market participants. At least that's not what this chart is suggesting, but we will look at a few more data points. If we just zoom out, we can see that this metric actually peaked at around 16.28 million BTC being held by long-term holders before we had this substantial run-up from around $40-ish thousand all the way to the new all-time high, about 73. And then the amount of BTC changing hands from long-term holders to short-term holders decreased to around 14.7 million-ish. So a fairly significant decrease, and this increase isn't exactly as it seems. If we go to something like the supply adjusted coin days destroyed, this is also not suggesting a huge amount of accumulation by long-term BTC holders. In fact, this may actually be suggesting the exact opposite. The supply adjusted coin days destroyed is looking at the velocity of coin movement. So what this is doing is looking at the amount of BTC that has been moved, multiplying that by the days that has been held. So if I held 1 BTC for 100 days and then moved it, that would be 100 coin days destroyed. Whereas if I held 10 BTC, it'd be 1,000 coin days destroyed, etc. So this gives additional weighting to those increased holders who have been holding an especially long period of time. And this looks like it spiked tremendously to the upside, suggesting the opposite of accumulation, maybe even suggesting distribution from long-term holders. But again, this isn't exactly true. If we remove this 90-day moving average and just put on the raw data, we can see that this is somewhat warped by this massive spike to the upside we had here, which if we go to the spent output profit ratio, we can also see looking at this huge spike to the upside in profit taken on wallets on May the 28th, 2024. But this was actually around 140,000 BTC being moved from a Mt. Gox wallet to another wallet. So if we just exclude that data point, again, this looks pretty normal for where we are at this stage in a cycle, somewhere similar to where we'd be in late 2016, early 2017 potentially, or maybe here during the 2019 into 2020 bull cycle when Bitcoin had this first rally before the COVID dump, which we hopefully don't see something similar. So what we can actually do to actually maybe get a little bit of an insight into whether BTC whales are actually buying Bitcoin is to look at the amount of BTC holdings in big wallets. So a Bitcoin whale's definition may be different from investor to investor. In my mind, if you hold at least 10 BTC holding probably $1 million plus of Bitcoin, you're probably quite serious about the asset. So if we look at whales as people holding at least 10 BTC, we can see if we zoom in over the last few months, since Bitcoin set its highest closing day price, we can see that there was 153,216 unique wallets holding at least 10 BTC. Whereas to now 153,498. So this metric has actually increased, suggesting the amount of people holding at least 10 BTC has increased. Whereas if we go to something like the 100 BTC, we're also seeing something a little bit similar. If we go to this metric here, 15,978, all the way up to 16,008. So not a massive increase, but the amount of wallets holding at least 100 BTC has increased. However, the story does start to change once we look to even larger wallets. So those holding at least 1,000 BTC has actually decreased from 2,072 to 2,060. Not a massive decrease, but still noticeable. And the big ones, the 10,000 BTC wallet holders, if we just zoom in again, we can see that this has decreased from 109 to 104. Now, one thing to bear in mind is, say, the 1,000 BTC wallets, for example, we've seen a 4 wallet decrease in the 10,000 BTC. So then we need to acknowledge that the amount that we saw here, you need to exclude 4 wallets because wallets over 10,000 are included in wallets over 1,000. So once we actually normalize that a little bit, and we also need to assume that a lot of these holders are actually probably holding a little bit more than the minimum threshold. So for example, if we look at the 100 BTC holders, they'll be anywhere between 100 and 1,000 BTC. So if we take an average of about 550 BTC for the average greater than 100 BTC but lower than 1,000 BTC holders, I've actually done the math so we can pull it up here, that the amount of 10,000 BTC wallet decreases, if we just assume they are 10,000, the 1,000 BTC wallets already there, we have probably close to an 80 to 90,000 Bitcoin decrease for these 1,000 wallet plus. So we're actually seeing whales start distributing BTC when we look at the absolutely massive wallets. You also need to take into account that the ETFs are spot Bitcoin wallets, so they are going to be included in this data. We do need to acknowledge that the 10 BTC and 100 BTC wallets have actually increased. 100 BTC have increased by about 18 wallets, so at least 1,800 BTC, but probably close to about 10,000 Bitcoin. Again, the 10 BTC wallets have increased about 250 wallets, about a 2,500 increase, but again, assuming that they hold slightly more than the minimum, this might be around 15,000 Bitcoin. So really, I know what you're saying. A lot of the Bitcoin ETFs have taken up a lot of institutional inflows. But if we go to the Bitcoin ETF data, we can actually see since the highest amount of inflows on March the 14th, so a day later, the March 14th was when we actually set the all-time high. The 13th was when we had the highest closing price. So on the 14th, there was 60.08 billion assets under management from the 11 largest Bitcoin ETFs, which would have equated to around 830,000 BTC, give or take maybe 10,000 Bitcoin. And then today, 5 months later, it's about 54.1 billion. So this has decreased, but you have to acknowledge that the Bitcoin price has decreased as well. So they probably have around 915,000 BTC in their assets under management. So about an 85,000 Bitcoin increase in the ETF holdings. So this may seem incredibly bullish, the 85,000 billions of dollars potentially if we regain new all-time highs. But really, if you look at the amount of new BTC in circulation, on that date, we had 19.653 million BTC. Now we have 19.738. This is 85,000 Bitcoin. All the ETFs have done since we set a new all-time high is negate the new inflows of newly mined Bitcoin. So really, we need to acknowledge that long-term big Bitcoin holders have actually been distributing probably around 60,000 BTC since we set an all-time high. This has been scooped up by wallets holding less than 10 BTC, but more than 1 BTC. This has increased around 2,500, which is about 14,000 Bitcoin. Same for about 0.1 BTC. These have increased about 50,000, which is 30,000 Bitcoin. So this is a huge amount of retail interest scooping up BTC. And then again, this has increased about 100,000, which will add a few thousand Bitcoin as well. So really, we've actually seen a little bit of a decrease in large holder wallets, which at first may seem a little bit bearish, but if we go back to this long-term holder supply chart here, we can see that while this is increasing, we've actually figured that there's probably around 60,000 BTC decrease in their holdings, which probably about $3.5 billion, which may seem massive. But if you look throughout previous bull cycles, this number usually drops by millions of Bitcoin. 60,000 over the past few months is really a drop in the bucket in terms of long-term holders distributing their coins. And really, because we're seeing some ETF inflows negating the outflows from Bitcoin miners, as soon as we actually start having some more positive price action, I'm sure that we're actually going to see more inflows to actually give the supply and demand economics of Bitcoin even more bullish fuel. Because until we actually see hundreds of thousands, millions of BTC start moving hands to new market participants, really, this is actually still quite bullish. And really, the amount of capital inflows required to send Bitcoin to new all-time highs is probably quite a lot lower than most people think, given the fact that the amount of BTC still being held by long-term holders is a huge amount of the circulating supply. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on bitcoinmagazinepro.com, your number one source for Bitcoin analysis. So in summary, while some metrics seem to be indicating that the supply of Bitcoin held by large and long-term holders is increasing, this unfortunately does not seem to be true. We've actually seen new market participants just becoming long-term holders, which has maybe warped a few of the metrics. And this is just likely due to the lack of sustained trend and choppy consolidationary period we've had since we set a new all-time high. And we've also seen a slight decrease in BTC held by longer-term holders. So quite the opposite of what we were maybe expecting, judging by a few of these metrics. And even when taking into account the ETF buyers, all these have really done is negated the outflows from BTC miners and the newly created BTC. So overall, I don't think this is anything to worry about. Obviously, it's not amazing that we've seen a little bit of distribution from long-term holders, but really 60,000-ish Bitcoin being sold or moved from long-term holders to new market participants or smaller holders really isn't anything to worry about. Throughout bull cycles, we usually see millions of Bitcoins change hand from large holders who have been in the market for many, many years, potentially, to new retail who are just coming in, FOMOing in based on speculation. So really, at this stage of a bull cycle, after we're already 4 times higher than when we were just a few months ago, if we look at the long-term holder realized price, they're at a substantial amount of profit, and they're still not taking a substantial amount of profits. So really, this is actually quite a bullish sign. I think once we actually start regaining all-time highs, and if ETF inflows can continue, especially now that we're post-halving and the amount of inflowing BTC, newly minted BTC, has decreased, the supply and demand economics of Bitcoin remain incredibly bullish. If you liked this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on whales actually potentially selling their BTC holdings. Quite the contrary of what you may have seen on social media of whales actually increasing their holdings, which doesn't seem to be true. Do you think this is incredibly bearish for BTC, or are you maybe not so worried about it at this stage in the cycle? As I said, let me know in the comments below and on social media. I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.